Hello, I am Joshua Palanga together with the Group 5 team, Agnes Ontong, J. Eni Tolentino and Mark Alibasco. We will share and discuss to you the UC2 posting transaction which cover LO1 preparing ledger, LO2 transfer journal entries and LO3 summarize ledger. The agenda for this presentation as follows: introduction and primary goals which I Joshua Palanga discuss first. Second, LO1 preparing ledger to be report by Ms. Agnes Ontong. Third, LO2 journal entry to be report by Ms. J. Eni Tolentino. Fourth, summarize ledger to be report by Ms. Mark Alibasco. First agenda, introduction and primary goals. Introduction. In bookkeeping, a general ledger is a set of numbered accounts a business uses to keep track of its financial transactions and to prepare financial reports. Each account is a unique record summarizing a specific type of asset, liability, equity, revenue or expense. A general ledger in which accounting data is posted from journals and aggregated from sub-ledgers such as accounts payable and accounts receivable. Primary goals. You must be able to: first, understand ledger for the list of assets, liability and equity account titles are prepared in accordance with the chart of accounts. Second, understand ledger for the list of income and expenses account titles are prepared in accordance with the chart of accounts. Third, to make a permanent record of all the financial transactions in a classified manner. Fourth, to supply detailed information on any account for a given period easily and immediately. Next slides to be discussed by Ms. Agnes Ontong.
Hello everyone, I am Agnes Ontong. I will discuss to you the LO2, preparing ledger. Preparing ledger is a record of a business's financial transactions. It summarizes all the revenue and expenses of the business, plus the debts owed and assets owned. In accounting refers to a book that contains different accounts where records of transactions pertaining to a specific account is stored. It is also known as the Book of Final Entry or Principal Book of Accounts. It is a book where all transactions either debited or credited are stored. There are 4 types of ledger, namely, bought ledger, sales ledger, general ledger and private ledger, but we will focus on general ledger. Elements of general ledger. Ledger accounts is the documentation of a single account within the general ledger. Sub-ledgers. It tells the person reading the ledger of the status of each account. Double entry bookkeeping. The double entry bookkeeping method is a critical component of the general ledger. Next, how to create a general ledger. Step 1. Identify and create the general ledger accounts. Start by classifying financial transactions into the 5 ledger accounts. This must be relevant to the form of the general ledger you choose to use. Step 2. Transfer the necessary accounts from the general journal. Companies that utilize the double entry bookkeeping method have a general journal. The general journal is the initial record of financial transactions of an organization. Step 3. Make sure to number all the entry records. The general ledger must contain a number column where you can indicate the journal transaction ledger corresponding to the general ledger account. Enforcing this step allows the company accountant or the individual handling the transfer to cross-reference entries for an accurate and precise record. Step 4. Indicate if cash payments are debit or credit. It is critical to state whether the account is on credit or debit. This allows the person to utilize the double entry bookkeeping method to guarantee the company's financial health is in balance. Step 5. Ensure the presence of a running balance in the general ledger. It determines whether the account maintains stability after all journal entry transactions are entered into the ledger. The general ledger. A general ledger is the system of record for an organization's financial transactions, whether it's maintained on paper, on a computer, or in the cloud. It uses numbered accounts, including debits and credits, from which a trial balance is computed. It provides details about finances such as cash flows, assets, liabilities, inventory, purchases, sales, gains, losses, and equity. The general ledger process flow. First, create journal subledger. 2. Import journals. 3. Review journal. 4. Approved journals. 5. Post journals. 6. Balance updated and last run reports. This is for creating manual journal. Next slides will be General Ledger column headings. Date column shows the date of transactions. Provides the information about time of recording transaction in books. It is very important because, without mentioning date, auditor cannot find what transaction is recorded in books on what time. Accounts, item or description. Shows the brief but a concise explanation of the transactions. General Ledger tracks 5 prominent accounting items: assets, liabilities, owner's capital, revenues, and expenses. Post reference identifies the specific location in the journal, like a page number or line number, where a transaction was recorded. That way, anyone looking at the subledger entry for a given transaction can easily double-check it against the original journal entry. Money column, debit. Debit money column shows the amounts that are transferred from the debit money column of the journal. Money column, credit. Credit money column shows the amounts that are transferred from the credit money column of the journal. General ledger accounts such as assets, liabilities, equity, revenue and expenses. General ledger sample. In these slides you can see the both sides of ledger, the debit and credit. For this account sample used is cash, shows both side date column, description, post reference, money column for debit and money column for credit. Next sample shows the general ledger account specifications such as cash account receivable, inventory, prepaid rent, security deposit, creditable WT, accounts payable and many more. Next slide will show you just short sample transaction of a general ledger. The debit and credit sides shows the different transactions, but at the end of the day the goal for a bookkeeper is to reconcile or be balanced. Next agenda, which is LO2, transfer journal entry, to be discussed by the next reporter, J. Tolentino.
Hello everyone, I am J. Tolentino, your next reporter for LO2, transfer journal entry. Posting to the ledger. Posting to the general ledger involves recording detailed accounting transactions in the general ledger. It involves aggregating financial transactions from where they are stored in specialized ledgers and transferring the information into the general ledger. After the transaction has been recorded in the journal, the entries in the journal will then be transferred to another book called ledger for final recording. The process of transferring entries from the journal to the ledger is called posting, which is the second phase of accounting. Procedure in posting journal entries to the ledger. Step 1. Locate the corresponding account in ledger. Step 2. Transfer the entry to the ledger from the journal as follows. Date, remarks and amount. Step 3. Place the page of the journal where the information transferred is located in the folio column. Step 4. Place in the folio column of the journal the number of the account in the ledger to which the posting is made. Note: above procedure would indicate that when the folio column of the journal is filled, the posting of such item has been completed. Types of journal entries. Internal transfer. Internal transfer are the most common type of journal entries. They are used to allocate revenue and expenses from one valid account of charts to another. General journal entries. General journal entries are less common and generally executed by the Controller's Office. They are used for accruals of revenue or expense and to record a change in balance that cannot be made via the internal transfer. Interfaced journals. Interfaced journal are systematically generated when a subsystem, example, cash module, feeds transaction information to the general ledger module. The process flow. Once the journal header and journal lines are entered, all journal entries must go through the following system processes: edit check, budget check, route for approval, and post journal. The importance of posting. First, the act of transferring an entry or item from a book of original entry to the proper account in a ledger. Second, the record in a ledger account resulting from the transfer of an entry or item from a book of original entry. Posting samples. Terzetto Corporation issues 20 invoices to its customers and records each transaction in the sales account and the respective debtor's account. Also, the company purchased from 10 suppliers the records in purchases accounts and respective creditors' accounts. In addition, some of the payable liability is recorded in the general journal account. The details are as under. Prepare general ledger, solution as under. Rules, posting in a ledger to be made in a chronological manner. Date-wise, while posting in the ledger, entry is to be made into both accounts. Double entries are to be made. For example, in the case of the purchase on credit, the entry is to be made in purchase account in the creditor's account, the amount is to be shown in the amount column, the debit balance is to be debited, and the credit balance is credited on the credit side. The balance in the nominal accounts must be transferred directly to the profit and loss account, assets are to be debited, and liabilities are to be credited. Post-closing trial balance is a list of balance sheet accounts with non-zero balances at the end of the reporting period. The balance verifies that the debit balance equals the credit balance. The aim is to have the two figures equal each other for a net zero balance. Types of trial balance: unadjusted trial balance, adjusted trial balance, post-closing trial balance. Advantage of trial balance: to check the debits equal to credits, to find the uncover errors in journalizing, to find the uncover errors in posting, to locate the errors in ledger accounts, to make financial statements, to list the accounts at a single place, to know the ending balance of each account at a place, to make the adjustments for unrecorded transactions, to find the missing amount of an account in the special case, to test the mathematical accuracy of recording process. Sample of trial balance is in under. The next reporter will be Ms. Mark-Ali Basquat. She will discuss about summarized ledger.
Hello everyone, I am Mark-Ali Basquat, your reporter for LO3, which we discuss about summarized ledger. Summarizing general ledger mean that we calculate balances of all the accounts, and those balances will be used further to prepare trial balance and to prepare financial statements. Is a record of your business's financial transactions. It summarizes all the revenue and expenses of the business, plus the debts owed and assets owned. Adding and subtracting with debits and credits. In double entry accounting, every financial transaction brings at least two equal and offsetting account changes. The change in one account is called a debit, DR, and the impact in another is called a credit, CR. Whether a DR or a CR increases or decreases the account balance depends on the kind of account involved. Table sample shows under. How to compute account balances. Sample shows below. What is an outstanding balance? An outstanding balance is the amount you owe on any debt that charges interest, like a credit card. Most often, it refers to the amount you owe from purchases and other transactions made with your credit card. It's also called your current balance. What is the difference between outstanding balance and remaining balance? Let's say you spent 500 pesos on your credit card. Then, you log into your credit card app. It says you have an outstanding balance of 500 pesos. You don't have 500 pesos to pay off that entire outstanding balance, but you can pay 200 pesos. So you send a payment of 200 pesos. You still owe the credit card issuer 300 pesos. That 300 pesos is your remaining balance. Remaining balance and outstanding balance are just two terms used to talk about the amount you owe your credit card issuer. Remaining balance is the amount you still owe after a payment. Outstanding balance is the total amount you owe, which is sometimes the same as your remaining balance. Ledger template samples. Free ledger paper template, financial ledger paper, ledger graph paper template and blank ledger paper template. To summarize all reports, let us listen to Sir Joshua Palanga.
Hello, it's me again, Joshua Palanga. So, what we have learned about preparing ledger, transfer journal entries and summarize ledger from the above examples. The ledger is used to prepare financial statements and contains a list of all the accounts, referred to as the chart of accounts, that are active. General ledger is the system of record for an organization's financial transactions, whether it's maintained on paper, on a computer, or in the cloud. It uses numbered accounts, including debits and credits, from which a trial balance is computed. Trial balance is the statement of balances of all ledger accounts of any firm on a particular date. If the total of the debit and credit sides is equal, the ledger posting for every transaction has been done correctly. From Group 5 slogan, "Life is like bookkeeping, everything must be balanced." This has been Joshua Palanga.
Agnes Ontong.
Jenny Tolentino.
Marcelli Busquet.
Your Group 5 first reporter. Thanks for listening, guys. God bless.